It's strange, isn't it? How money quietly slips through our fingers, like time, like sand, like memories of yesterday's sun on your skin. I remember the first time someone asked me, "What would you do if you started investing now, with just a little bit of cash and a heart full of questions?" I felt the weight of those words, curiosity mixed with fear, hope flickering like a candle in the wind. So if you have ever sat in silence, staring at your balance, wondering if your future could look brighter than your past, stay with me. Before we go further, if you find something here that stirs you, if you sense possibility waking up inside you, hit subscribe to join this journey. Let's not walk these uncertain roads alone. And yes, if you want to be the first to feel every pulse of knowledge I share, tap the bell, let it ring a promise of new beginnings, of small habits quietly building something extraordinary. There are so many paths, but the forest is thick with tangled branches and confusing footprints: stocks, real estate, gold, the cryptic language of ETFs and orders and ratios. It feels like standing before a vast ocean, uncertain if you should risk drowning for a chance to swim with the currents. But here's the truth I discovered after years as an advisor and decades as a restless, roaming mind. Your journey starts with why. Not just why you want to grow your savings, but why you fear losing what you have, why you believe more is possible. The soil beneath our steps shifts. Inflation quietly erases yesterday's purchasing power. The cost of a simple meal rising faster than our patience. I still remember when a burrito cost me less than $9. Now it's closer to $50,000 used to buy me nearly 6,000 burritos. Now, just over 4,000. A haunting reminder that every uninvested dollar is slowly fading away. I don't know about you, but I sometimes mourn the value those dollars once had, the little comforts they brought. It is inflation, the silent thief. It means your future self will suffer unless you find ways to outpace its steady advances. Investing isn't just math, it is an act of hope. Investing, for me, is choosing to believe that the days ahead can be brighter, not just for myself, but for those I love. That's why, when I look back at the stories the market tells, its wild rises and sudden valleys, its slow, persistent climb, 8, sometimes 10% each year, stretched over generations, I see not charts and numbers, but the echo of dreams deferred, then realized, again and again. There is power in compounding. Imagine, $1,000, quietly earning, then growing, each year a little more than the last, unfolding into more than 6,000 over 20 long, steady years. Or, imagine the windfall of $1 million turning into an unearned 100,000 each year, simply because you let your money work while you live. It's leverage, yes, but it feels more like planting seeds and trusting deep roots to find water through drought and flood. This is not magic, it is patient faith rewarded. I prefer stocks, not because other investments lack value, but because their doors feel closed to many. A house demands time and patience, selling it is a slow, aching process. Gold glitters, but does it feed your future? Stocks, by contrast, are rivers, liquid and accessible, always moving. You can join or step out in days, even hours. And when you chain yourself to an index like the S&P 500, you are riding alongside the giants of industry, Apple, Microsoft, Nvidia, dipping your cup into the currents these companies create. The S&P is more than 500 companies. It is 500 stories, 500 battles fought and often won, 500 times you said yes to progress. Somewhere, a part of me fears making the wrong choice, picking a single company that falters after years of promise. I have seen it, 20 years pass, and the stock still hasn't healed. That's why I trust index funds and ETFs. They are gentle umbrellas, offering shade and shelter, promising that as long as you persist, if you keep buying, keep believing, your stake will grow, slow but sure. It is not certainty, it is the closest approximation we have. But how do you begin? You need a vessel, a place to hold your growing hope, a retirement account or a brokerage account. The names might seem intimidating. In truth, they are simply containers. A 401k through your workplace, or an IRA you open yourself. Each with its own trade-off, each a mirror reflecting your willingness to tie up your future for the sake of tomorrow's comfort. And if you can't or won't bind yourself to retirement limitations, open a brokerage account, let your investment breathe. It used to be you needed a voice on the other end of a phone, a broker scrawling your future on slips of paper. Now, a tap, a swipe, in a simple app, Fidelity, Schwab, Robinhood, and you are in. The world is opening and you are invited to step through the door. Pause here with me. If this is making sense to you, if it moves something deep, like a memory of a lesson you hope to learn one day, tap like. If there's a quiet disagreement whispering inside, or a new question blooming, leave a comment. Your thoughts are welcome on this path. Once you have chosen your account, the next question stirs. What do you actually buy? Individual stocks shimmer with promise, but shadows lengthen behind them. I have been drawn to their light, only to find risk waiting in ambush. An index fund, by contrast, is a basket, a patient gathering of 500 stories, some soaring, some struggling, but all pulling in the same general direction. The expenses are low, no hands reaching in for a share of your harvest. You buy into the story, not just the star. What are these symbols, you ask, the cryptic codes like VO? Imagine them as airport call signs, Apple as AAPL, Tesla as TSLA. Simple signals for complex realities. I trust VO, the Vanguard S&P 500 ETF. But there are others, SPY, SCHX. Each is an invitation to diversification, a gentle scattering of risk across a wide, soft field. It's tempting to chase winners, to pick the next Nvidia, to hunt outliers. Sometimes, lightning strikes, but more often, patience is rewarded, not with drama, but with certainty. Consistency, I have learned, is its own talisman. $6,000 each year, or $500 each month, diligently poured into the index, becomes a future measured in millions over 3.5 decades. It won't make headlines, it will make peace. When do you actually invest? The question haunted me. It whispers that you are too late, that the market is too high. But history tells a gentler story. Nearly 1 out of every dozen days is an all-time high, and new heights follow one another like footsteps in fresh snow. Wait and you risk missing the days that matter most, the days when the world surprises you with generosity. Miss just 10 good market days in 3 decades and you lose half your gains. Miss 30 and your dreams are whittled away by more than 80%. So, the answer I hold close is simple. Just keep buying. Do not worry if the sky seems too bright or too dark. Just keep buying. Let the rhythm of regular investments drown out the noise of fear and hope. Some voices talk of ratios and valuations, PE, price to earnings, the heartbeat of a stock's value. It is true, buy when values are low and promises are high, and you gain more ground. But over 20 years, patience dissolves regret. There has not been, looking back, any span of 20 years in which the broad, patient investor truly lost, counting the dividends that fall like gentle rain. Even the red dots of loss fade over time, converging into steady green. I see articles now from years gone by, warning that the market was hopelessly overvalued. Yet here we are, nearly 4.5 times higher than their prophecies feared. The key is not prediction, but persistence, humility, discipline. When you step through the door, will you drop everything in one go, or step softly with regular, gentle investments? Lump sum investing can be powerful, but dollar-cost averaging is a slow, reassuring cadence. Each month, set aside a piece. Some months the world will feel too expensive, and you'll buy less. Other months, opportunity will shine, and you'll buy more. But over time, you are neither hero nor fool, merely persistent, and that is enough. And how much should you invest? I have wondered that, too. Some say, whatever you have, but I have learned to honor consistency first. If you are young, just out of school, your $100 is better used healing your mind, building skills, chasing opportunities. And you have a reliable income, steady, like the seasons, then begin. It isn't the number that matters. It's the rhythm you can maintain without breaking. I started with just $100 each month, sometimes $200 when blessings came as tax refunds or sudden bonuses. The secret is to listen to yourself, to feel your own risk, your joys and anxieties, your time horizon. Are you young and bold, willing to watch the market swing wildly, trusting that you have years to recover from any misstep? Or are you nearing an age where caution weighs heavily, where losses would mean wounds that may not heal before retirement? That is your truth, your measure. Investing requires risk, sometimes sharp, sometimes dull, but over time, the edges soften. The market climbs, sometimes falls, sometimes stands still. But it moves with the years, and so will you. If I were to start today, fresh as dawn, I would seek my why first. I would open the accounts without fear. I would buy into patience and persistence, choosing index funds or ETFs, letting them carry me through decades, not days. I would learn constantly, cross-checking wisdom with humility, letting the unknown become familiar. And always, I would remember. This is not about numbers, but about hope. My friends, if this touched you, if the story feels like yours, don't let the lesson stop here. Watch the next video. Explore the unexpected power of compound interest, the secrets of net worth after that first 100,000. Click the bell, and let new knowledge come to you before the sun rises tomorrow. I'll see you again, somewhere between risk and remembrance, between hope and strategy, ready to begin, together.